Everybody. Good morning, everybody. Matt Weber here with Alpha Funding Partners. Happy Saturday. So much to go over. We have a ton to unpack. Really excited and honored to be here. I want to thank Nick and his team, David, Elijah, all of the NJ RIA group. You guys are phenomenal. I'm so honored to be here this afternoon. Um, I'm so used to being in front of everybody at these expos and these events, but I'm going to try and bring as much energy as I can and get into your home, wherever you're streaming from. If it's the beach or if it's your house or if it's your office, I would love to find out. Put it in the comments. I would love to know where you're tuning in from. Quick little rundown of what we're going to be going over today. This is fixing and flipping in the COVID world. As people know, things don't always go right. And then what do they call that? What can go wrong will go wrong. And what we want to do is obviously the savvy investor. I'm sure you guys are just looking for information, but the savvy investor is going to adapt. And what I want to do is I want to share some of those nuggets and some of those facts that some of our investors have been using during this time to get past COVID and also thrive in COVID. So we're going to be going over the state of the real estate market as it relates to real estate, but also, general economics. I think, the economy definitely does work in conjunction with real estate. And at the same time, we'll also be going over some of the current adjustments to lending guidelines. My name is Matt Weber, and I'm with Alpha Funding Partners. Pleasure to be here today. We are a hard money lender. We joke around we're the softer side of hard money. What does that mean? We are a private direct lender. So what we do is we back real estate investors, providing you with fix and flip funding. We also provide new construction financing. We can also provide commercial bridge funding for mixed use properties, anything over $500,000. If it's 4 units of resident, 4 apartments, and maybe there was 2 storefronts, 6-unit mixed use. We can also help you out with commercial mixed use bridge funding. We can provide you also with a debt service coverage ratio product as well to be able to fund your term loan. So not only are we just providing you the short-term bridge financing, but we're also providing you the longer-term loan as well. So we have a lot of different options. We have an amazing team. We've been around since 2007, and with that, we've been able to work with so many different investors. Proud to say that most of our business is repeat business with our investors, that we continue to work with the same investors over and over and over. And I think that's part of it is the type of culture that we try and, curate, on a day-to-day basis. So if you can, in your comments, I would love to know where you guys are tuning in today. I'm going to get into this in a moment. If you have any questions, throw it in the chat. I would love to go over it with you. We speak with so many people on a daily and weekly basis, and I would love to provide any valuable information that I possibly can to help you guys. To go over just a quick snapshot, the state of the real estate market. Back in March and April, there was a huge shock to the system. When all of the stay-at-home orders were instituted, I think real estate took a huge hit. You looked at, home values, the amount of units of homes that were sold, inventory overall. There was a lot of changes in March and April. In addition, on the lending side, we had a lot of major adjustments, and this is obviously on the non-traditional side. On the traditional side, rates have been historically low. It is the best time if you're able to refinance your home. If you have a rental property and you can go full doc, there are so many really good options out there. On the private side, we have had to make a lot of adjustments. There was a lot of squeezing in our box. So whether it was, private capital that dried up, or if it were, capital that we had to be more conservative to kind of, adjust to some of the uncertainty that was going on. Everything really changed in April and March. And with that, we had to make those adjustments as well. Some of those lending guidelines were more money down. There were increases in minimum credit scores. Borrowers had to have more experience. We weren't able to just lend to anybody. Maybe it was a new investor. We weren't able to lend to anyone who had less than three deals. I think there were a lot of groups out there, the ones that actually made it through those first couple months that didn't close up either temporarily or still permanently. They had to really raise those experience requirements, the liquidity requirements, the credit and the financial requirements. It really changed a lot for a lot of investors and also for us as the lender. Um, what we have seen though in the last couple of months is a huge change. That if you look at year over year, last year there was a ton of there wasn't as much inventory in the market. And now this year, we actually just saw the National Association of Realtors. There was actually a reduction in inventory from last year. And last year, there was low inventory. So, what I really want to get across to you today is if you're fixing and flipping right now and you have the opportunity to get into a deal, I want to let you know that there is a tremendous upside on the other side of this. With the fact that there is such low inventory, home values have actually been going up. We've been seeing appraisals, and appraisals have actually not even been coming in at what we thought, but actually above sometimes what we had thought, what we've been anticipating. The other thing is days on market has gone down because of such low inventory, because absorption rates have been so quick. Houses have been, the houses that have been listed on the market, and then those homes have now been purchased in a short period of time. The absorption rate, does anyone know what absorption rate is? It's basically if you have a certain amount of units, let's say in a given town, there were 30 homes that are listed on the market. The absorption rate will basically tell you how long, if there were no homes introduced into that market, if it were a specific town, how long would it take for all those homes to be sold? If it took you 6 months for all the homes to be sold, then you would have an absorption rate of 6. If it were 3 months, it would be 3. Anything under 6 is a seller's market. That means these houses are moving. And if the houses are moving and there's not as much inventory, you're able to get really good values, really good profit for those homes. And obviously they move quickly. So days on market has definitely gone down. So inventory has gone down. Days on market are shorter. We're seeing values actually going up. So if you're able to get into a deal, although there's low inventory, there is a tremendous opportunity for you as a real estate investor right now in the COVID world that we live in right now. There has definitely been some adjustments that investors have had to make. I have noticed that. Speaking with a lot of contractors, a lot of investors, what adjustments have you been making, not just back in April and March, but also now in July and August going into the fall? Some basic things that I've heard. Obviously everyone has been dealing with this, the buzzword of social distancing. And you can imagine now, I would love to be in front of you guys, but obviously I'm here and you guys are where you guys are. We've all been experiencing social distancing. That's also happening right now on job sites. Investors are letting their subs or their general contractors or their project managers know that there has to be social distancing. They want to make sure that their job site is still available, that they're still able to work. So they have to follow these new guidelines. Masks, everyone's been wearing masks uh, since the beginning of COVID. And I believe now in some states, you have to wear a mask if you're outside at all times. We're based here in New Jersey, and if you're outside, you have to be wearing a mask. A lot of these contractors, subs or general contractors, when you're on the site, they're having to wear masks at all times. Pre-COVID, maybe the only time you might have been 95 masks for dust or particles that could be in the air. Now they're having to wear them all day on these job sites, along with the masks, along with the social distancing. The protocols that are in place are much more intense, where cleaning and sanitizing the workspace is super important. So we've noticed that having to spend extra time cleaning, rooms, if it's the floors, if it's handles, if it's staircases, anything, having to spend that extra time cleaning. So a lot of those things have happened, and it looks like a lot of our investors have done what they've had to do, just like all of us, right? We've all had to make these adjustments. And I think many of them have done very, very well. And it's one of those things where either you're going to adapt or you're going to die. And really, the point of this is to really get across some of the adjustments that people have had to make, and also looking at it with some of the negatives that have happened from COVID, that there's a lot of opportunity right now in the market. Um, like we were just going over with changes to current lending guidelines. With Alpha, we provide acquisition and rehab funds for your project. So if you were going to buy a home and you're going to renovate it, we will give you the dollars to purchase it, and we'll also give you the money to renovate it. Typically, loan to cost, we're anywhere between 80 and 85% loan to cost on any project. Um, Back in March, the benchmark for experience was so high, the entry level, like the barrier of entry, was having 3+ deals or more where we were. And obviously, I'm not going to speak for other lenders, but I know that a lot of other lenders had instituted experience requirements to get into a loan with them. The barrier for us was starting with 3 deals in the last 3 years completed. And even if you had those 3 deals completed in the last 3 years, you would have to bring 20% of your total project cost into the deal. And on top of it, you would then have to bring a interest reserve. Now, how many of you guys know what an interest reserve is? If you don't know, an interest reserve is basically what you're doing is you're putting your interest payments in a reserve. And what you do is you're prepaying your interest payments up front. So if you had 6 months of interest payments, if it was a $300,000 loan, you might be paying anywhere between, a little less than 1% to maybe 1%. You might be paying a couple $1,000s every month. You might have had to put 6 months of payments up front in addition to the 20% of total project cost. And also, we were requiring bank statements where you had to show all of your funds, not just for the 20% of total project cost, not just the interest reserve, not just your closing costs. You had to bring and working capital, because don't forget, once you're in the project, that's when it starts. That's when your project begins. Closing on the property is not enough. You need to move your project forward, get the work completed, submit to Alpha your draw request so that we can give you your construction funds. So obviously with Alpha, we fund in the rears in our construction. So having to see all of that in a bank statement, that was a steep, steep uphill climb for many, many investors, and it affected us as lenders as well. So I think it's mutual in the market that there was a huge adjustment period. Uh, just recently, some updates with Alpha with our lending programs. We are really, really, I've been seeing some amazing things. We are always trying to bring the best capital to the market. We take a lot of pride in providing flexibility and providing a nice, diverse capital stack for our investors, a lot of options. And it allows us to be creative. With us being a direct private lender, we can make our decisions. We're the ones that are going to be deciding whether or not we can fund your deal or not. Everything that Alpha does is in-house. So when you start with us, whether you're working with myself or one of my teammates, starting and underwriting that loan, submitting the paperwork, and then once the loan closes, beginning to deal with the servicing of your loan, making your payments, dealing with construction draws, and then the actual funding, the physical funding of your deal. That is all done under one roof with Alpha, and it's something that we take a lot of pride in. With that being said, we have been really able to push up our loan to cost requirement, where now borrowers, instead of having to bring 20% of total project cost, let's just say you had a $300,000 purchase price and you were going to put in $100,000 and you needed that 400 was your total project cost. You would have had to bring in $80,000 into your deal on top of your interest reserve and having working capital plus pay closing costs. That was a lot of money to have to bring to the table. What we have now is 2 basic tiers. If you're somebody who has completed at least 1 deal in the last 3 years, every year for the last 3 years, so you have 3+ deals completed, we can now fund up to 90% of your purchase price. So that means you're only bringing as little as 10% down. Right now, this is 4 months post, once we had that big breakout in COVID where everything was shut down. We've seen a huge pickup with what we can offer. And we're also always funding 100% of your construction fund. So now, if you have those three deals completed, if your credit's over 650, and obviously the deal fits our parameters, the after repaired value, loan to value, which our max would be 65%. We can actually, in some cases, go up to 70%. We're able to basically do, with no interest reserve, might I add, what we were basically doing pre-COVID. Now, if you don't have the experience and if your credit may not be at that 50, we do have some other options for you. Now, below three deals, you would have to have at least two deals completed in the last three deals, in the last 3 years. And with that, what we can do is we can cover about 80% loan to cost on the total project cost. So where our experienced investors had to bring 20% of project cost, we're still able to fund borrowers who have maybe one deal if they've already worked with us before and it was recent, or if you have two deals and you come to us in the last 3 years, we can still fund your deal. There will not be an interest reserve, but you will be having to bring about 20%, maybe 15 to 20% of your total project cost up to say a max 65% AIR LTV. So there's a lot of really good things that are happening. We have started to fund some new construction again, where I think new construction was really on the back burner. Now, understand that our new construction product is a specialty product. So it has to be, it's specifically for investors who have completed new builds in the past, whether it's stick build or modular build. But if you've completed new construction, you're interested in new construction, you can bring that to us and we can take a look at it. We're funding anywhere between, I would say, 80 to 85% loan to cost on new construction. And that's obviously your acquisition, either land or the property, and then obviously the build cost. And this is just the hard build cost that we would be covering up to a 65% max AIR LTV. Now, you'd have to have strong credit, strong financials, and experience. So this is not just something for anybody. We are very, very, selective with the loans that we are putting out, but we are providing new construction financing. This would be a localized product. So, we're not funding our, new construction in Atlanta or Chicago or Connecticut, but really, in the metro area, New Jersey, New York, PA. If you have a project, we'd love to take a look at it. Something also new and exciting are mixed use products. So a lot of people have been looking above 4 units and outside of resi, and they wanted to know, does anybody have a product for that? Alpha does. Now, we're not funding anything under 500,000. So sometimes these small mixed use properties, we would not be able to fund anything under that $500,000 mark. Also, we are looking at experience. We are probably going to be only covering around 75% loan to cost on the total project. So that would be acquisition and any renovations. And this is a short-term bridge loan. So if you're looking for a 30-year product for this mixed use, we would not be able to give that to you in-house. But I think there's a lot of really good things to be happy and excited about moving forward. I hope that things continue to improve through COVID. I see that just here in New Jersey, the rate of transmission has been staying somewhat low. It looks like deaths and positive cases and all those different key metrics that people have been looking at, they've been staying relatively low. I know the national outlook is a little bit more grim because there's a lot of areas in the country that really have not been able to corral this, so to speak, just because everybody's out there, everyone wants to work, everyone wants to go back to school, some don't, but it's been a very difficult time for a lot of people. What I really stress is empathy, having empathy right now. If there's anyone you can help them. Also, stay focused on yourself, stay positive, invest in yourself. This is a time where there's not a lot of people around you. If you're at home and you're working from home, you don't have your group within your office working with you. You may not be in a community like NJ RIA. NJ RIA, we're not able to see each other on a monthly basis. And that's always been some built-in accountability for a lot of us. And now with us being somewhat isolated, it's so imperative to really focus on yourself, whether that's physically, mentally, spiritually, being very careful about the information that you're feeding yourself, the people that you're surrounding yourself with, taking care of yourself, whether it's drinking water, getting some exercise, getting out of the house. There's so much that we should be focusing on, and it's the good things. If you guys have any questions, what I want to do is I want to open this up for some Q&A. If anyone has any questions about whether it's just the state of the real estate market, just adjustments for investors that we've been seeing on the lending side, or just changing, adjusting to new lending guidelines overall. If you guys have any questions, obviously throw it here in the chat, and I would love to answer any questions you guys have. Any questions? All right. Well, if anyone has a question, what I'm going to do is I'm going to give you our email address, our phone number, and also our website. We're always available. We work around the clock. The email address would be info@alphafunding.com if you want to reach us out through email. The website is www.alphafunding.com. And the phone number would be 732-657-2014. Again, it's 732-657-2014. It's been great chatting with all of you guys today. And if you have any questions, feel free to reach out. Hope you guys have a wonderful weekend and keep crushing it. Have a great one. Bye-bye.